Hi, welcome to the market view for the 20th of February 2014. And starting off with the daily chart, we can see the market is getting into a bit of a sideways move this week. It's fairly quiet and no surprise really after the up move that we've had in the background there. So the market trading between the sort of 160, 166.50, 167, and that's about it. Yesterday's high was 167, let's just have a look, 167.32. So the market is stuck in a bit of a range at the moment, and certainly has been for the last couple of days, and probably will be today as well. Just looking at the 30-minute chart, we can see that, surprise, surprise, as I said in yesterday's market view, I thought the unemployment percentage would stay at 7.1. It actually came out slightly worse at 7.2, but that's no surprise at all with an election next year. You'll see the government doing everything it can possibly do to make sure that interest rates don't increase before the election, even though there's rumour that they will increase a year in March. My guess would be that they wouldn't want to do that. That would be very damaging to the vote, unless, of course, they are forced to do so with any sort of systemic problems that relate to the banking sector and also currency collapses in other parts of the world, which we've seen recently in Argentina and so on. So yesterday the market moved lower. It traded down to the support one. And for those of you that are new to trading, this shape that we have on here may remind you of a letter of the alphabet. It's a V. And this is what's known as a V-shaped correction, where the market trades down and then trades straight back. Not necessarily in 5 minutes, of course, each bar's 30 minutes, but it doesn't matter what the time frame, whether it's daily, weekly, monthly, or an intraday time frame. So we get this V-shaped correction, the market trading back up to where it moved lower following the release of the unemployment figures there. And then it's traded back down and is stuck in the sideways range, and now showing a potential buy signal for this morning. Right, let's have a look at the news and see what the market can expect today. We've got, let's just move to the top there, we've got German PPI, which has already been released. That was at 7 a.m. French manufacturing, that may move the euro, not too much for the UK. We've got German flash manufacturing there. Anything for the UK this morning? Let's have a look. GBP CBI medium, which is out at 11 a.m. So there's nothing out this morning, actually. Unemployment claims, weekly one, that is, for the US, which is out at 1:30. And the core CPI, we've got CPI figures out this afternoon as well, and that's showing a decrease in the US as it does in the UK. I mean, we all know that prices are increasing, particular food prices, and wage rises aren't increasing, although the government would have you believe that the gap is narrowing, which, again, I don't believe a single word of. And everybody else, really. I mean, when they take food out of or more or less taking food out of the CPI figures in the US, there's barely anything left. And this, again, is a way of manipulating the figure so that they can keep interest rates low. And it's the same in the UK as well. I know that we have, or used to have, disposable cameras inside of the calculation for the CPI, and I know lip gloss is in there as well, which really is an absolute nonsense. I know they took the camera out because obviously they were forced to do so with most people having cameras on their mobile phones now, so disposable cameras becoming sort of a thing of the past. But that just shows you the sort of tricks that the government will get up to in order to keep the lid on the so-called inflation figures. And I mean, at one time, house prices used to be in there, so could you imagine what it would be if they were still part of the calculation? Especially at the moment with the lunacy that Carney and Co. of lending money to first-time buyers, 5%, and that's why you're seeing the increase in the house prices at the moment. It's an illusion, and it won't last. It's an asset bubble that's waiting to burst. And government funded this time as well by 5% and 95% by the banks. I mean, if the banks were going to offer the 100% as they did before, everybody would say, or would actually, clock what they were actually doing. whereby this is a sleight of hand that the government now are involved with lending 5% and allowing the banks to lend 95%, which is taxpayers' money anyway because they were bailed out in 2008. So work it out for yourself. Sheer lunacy, an illusion, and when interest rates are forced to go up, then they will have no choice. And this is the dilemma that the government has, because if they try and prove that the economy or manufacture the economy through false figures from the Office for National Statistics, make it look as if everything's okay. We know it's not okay, but if they make it look okay and then everybody's happy, then they're going to have to increase interest rates, which spoils the party that they've created. So it's a no-win situation. So anyway, getting back to the news, slight digression there. We've got Philly Fed index there as well from the US, and Yellen is going to testify this afternoon as well. Fed chair is what she likes to be called. She doesn't like chairwoman or chairman or chairperson. She likes to be called an inanimate object, the chair. So there you go. That's what's coming out this afternoon. We've got one or two news items that could move the market this afternoon, but nothing around this morning apart from a couple of European news items, manufacturing, which are the main figures there. So that's about it for today. We didn't get a trade up or down yesterday, which is slightly odd. But I managed to pick up a few pips in, I'll just find it, in the Aus dollar late on last night. But other than that, there wasn't too much around. So let's hope today brings a bit more. But then again, when you look at the daily chart, you can see why, because we've gone into this sort of narrow trading range for the last couple of days. We have to deal with what we're, all the cards that we're given, so they're the cards that we're given at the moment. Right, that's it from me for today. I will see you tomorrow, which will be for the 21st of Feb. Have a great day, and as ever, thanks for watching.